Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and back with one of our most highly requested topics from you in the community. And Nation, there is no better investment than penny stocks for those triple-digit returns. I'm going to share two reasons why this is, but all you have to do is look at the runaway names like Netflix to make the case. Netflix opened in 2002 as a $500 million company just 18 years ago. A $120 investment back then would be worth $45,600 today. For what it cost you to buy a toaster oven in 2002, you could turn that into a 2020 Mercedes C-Class with all the upgrades. And it's not just getting in on that next big thing. Shares of SiriusXM traded for just 10 cents a share in 2009, 15 years after its IPO, before rebounding to $5.60 each for a 5,600% return. Imagine turning just $500 into 28 grand. In this video, I'll show you how to create a list of penny stocks to follow, how to start looking for those investments that are going to potentially turn $100 into thousands. Then I'll show you how to narrow that list to a few with the best potential and reveal 3 penny stocks I'm following right now. We're talking creating a penny stock list today on Let's Talk Money. Nation, thank you for taking a part of your day to tune in. I want to send a special shout out to all my Bowtie Warriors. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, before we get to that penny stock list, I want to get to a quick definition of penny stocks because there are a lot of misconceptions, but I'll leave a clickable index in the video description below if you want to skip over it. Now, penny stocks aren't just stocks trading for under $1 or even under $5 a share. The real definition revolves around the total company value, its market capitalization. Now that's the number of shares times the stock price, and you can usually find this on any stock quote. And here you see that Apple is definitely not a penny stock with a $1.3 trillion market cap. But GameStop is with under $300 million in market value. So a penny stock is generally any company with a market cap of $500 million or less. I've even seen companies with a market cap under $1 billion be called penny stocks, but it's usually that lower amount. Penny stocks are also generally less liquid, meaning there aren't as many shares traded on a daily basis. Now that just means that they're usually flying under the radar of most Wall Street analysts and can be a huge advantage for us Main Street investors. And that's really one of the 2 reasons I love investing in penny stocks. Obviously you've got the potential for market busting returns. You're never going to get a 38,000% return on shares of Apple like you did with Netflix. For that to happen, that $1.4 trillion Apple Corporation would have to become a $532 trillion company, which is 6 times the size of the entire global economy. So for those 10-bagger returns, it makes much more sense to look for those undiscovered companies that can grow from $100 million into a $1 billion business than expecting some of those large cap names to really do the same. Now the second reason though, and this one isn't talked about as much, but the very fact that penny stocks aren't well covered by Wall Street or its analysts is a huge plus for regular investors. There are 36 professional analysts covering shares of Apple. That's 3 dozen investors that have made stock analysis their life's work, and we're not talking a couple hours watching a stock. I worked 60-hour weeks as an analyst, reading every word of company 10K reports, creating cash flow models based on the financials. It is an intense job. That all means that very little comes as a surprise when it comes to analyzing those big companies. Through 2019, analysts were off by an average of just 4% when it came to predicting earnings for those mega cap companies. That surprise percentage tripled to 12% though with those small cap stocks. These penny stock companies just aren't analyzed to the extent of other stocks. That means if you're willing to take the time to look into these names, you can uncover more opportunities and make that higher return. Before we get to those penny stocks I'm buying, 3 stocks that I think could at least double over the next year, I want to show you how to create your own penny stock list. Now those of you in the nation know I'm not about to just drop a few stock tips and then call it a day. I want to help you be a better investor, show you how to find these stocks for yourself. So I'm going to start with a simple stock screener like the one here on the Webull app. You can screen for stocks of companies under a certain size or a share price in the Webull app and create a screener that continuously looks for those stocks. I started with companies under $1 billion market cap, so that definition of a small cap or penny stocks. You can also use some of these technical indicators which screens for momentum and other patterns in a stock. So I'll use this one on relative strength signals and see which stocks meet the screener. For this basic screener, I'll usually set it for companies under $1 billion market cap. I'll also set it for a positive return on asset, that's the ROA criteria here, and a positive return on equity, the ROE criteria in the app. So here I'm just looking for small companies that are generating positive returns on their assets and investors' equity. That tells me management is effectively using those assets and rewarding shareholders. Now, while I am looking for longer-term penny stocks in this one, I'll sometimes include this technical factor here also, the RSI or Relative Strength Indicator. This just measures the recent movement in a stock to estimate if it's oversold or overbought compared to recent trading. Adding a short-term indicator like this can be a good idea if you want to find stocks for a quick rebound potential as well as that longer-term investment. Now, once you've got your list of stocks that meet these basic fundamentals and maybe some of those technical signals, it's time to dig into the financials a little bit, and this is where the real money is made. Anyone can watch CNBC for half an hour and come away with some stock picks. Getting those triple-digit returns, though, means sitting down and taking the time to find those undiscovered values. And here I'm primarily looking for 4 factors in the financials. And first, I want to find companies that have grown their sales over at least the last 2 or 3 consecutive years. Even if the company isn't profitable yet, it's at least getting closer with those positive sales trends. I also want to see a consistently higher operating margin. Now, that operating margin, or the operating income divided by the sales on the income statement, that trend is hugely important, especially for these small, fast-growing companies. You see, most penny stock companies, they're growing sales so fast, they're just sacrificing efficiency for growth at this stage. And sales are growing, but they're also spending so much on marketing or more staff that the operating margin or the profitability is decreasing. But if you can find a company that is growing sales and becoming more profitable while it's doing that, you've got the potential to see earnings explode into the future. I also want to watch for runaway debt here for these companies because a lot of these, they'll get so loose with the spending and just start using lots of debt instead of keeping things lean. Management rationalizes that it's okay to borrow because the company is growing so quickly, but it's just a noose that slowly tightens around the company. So I'm looking for companies that are able to produce that sales growth, do it efficiently, and still stay lean without blowing out their debt to equity ratio. Finally, I just take a quick look at the stock chart, and this isn't anything scientific, but I don't want to invest in a company that's been around for decades and never did anything. You see these all the time. Companies trading in that penny stock space for decades and never seem to be able to make it into the big time. Now, once you've found some penny stocks you want to follow, you can either buy the shares or use this paper portfolio feature on Webull to follow the stocks for a while. The app gives you $1 million to test out different strategies and then stocks before you make a real trade. So if you go into the app and you see I've already been testing a few stocks with these simulated trades. If I go into the stock and click paper trading, it's going to take me to a page to buy the shares. Then it's just like a normal trade where you put in the order to buy the number of shares you want. I can follow the stock in my paper portfolio just as if it were real money. Now I want to reveal those 3 penny stocks I'm watching. 3 stocks I think could post 2 times return or more over the next year. I already own one of these and will be putting the other 2 in that paper portfolio on Webull to follow before investing. First here is $69 million Zovio, ticker ZVO, trading at $2.16 a share. Now, Zovio is the leader in the education tech space, which frankly I'm surprised hasn't completely blown up on how important this has become during the lockdown. Traditional schooling has completely shut down, and a lot of districts, they're questioning if schools are going to be able to open in the fall. Now, Zovio partners with colleges and universities to deliver online and connected solutions to that traditional way of education. Now, we're talking online testing, faculty management, and software, things that are going to be in high demand over the next year. Sales have been a little weak over the last year, but the balance sheet is a screaming buy. The company has $63 million in cash and no long-term debt with just a market cap of $69 million. So we're talking 93% of the market value of this company is backed by cash. That's unheard of and a huge margin of safety for investors. Next on our penny stock list, and this is one I already own, is Groupon, ticker GRPN. This is one I highlighted a few months ago when I started building my position, and I've got about 12,000 shares at an average cost of about $1.15 per share. Now, I'll be the first to admit, though, Groupon has been a tough ride and will probably take the better part of this year to do anything, but there are a few things I really like about this stock. Groupon is a leader in e-commerce, with 1 in 5 US internet users visiting the site each and every month. It's got a unique app and a huge amount of brand recognition, and the clear leader in the $1 trillion local bargains market. But going back to one of the key themes that I'm looking for in penny stocks here, that survivability to get through the few bad months, we look at Groupon's balance sheet and see an extremely strong cash position. Groupon has $750 million in cash against non-current liabilities of just $370 million. So a net cash position here of $380 million. Now take that against the market value of $604 million, nearly 2/3 of the shares are backed by cash. Will second and third quarter results be bad for Groupon? You better believe it. But that $750 million in cash in the bank means it survives for when customers come back and drives these shares higher. I like the shares up to at least $2 each, and I think it can go up to $3 per share over the long run. Our third penny stock here is Quantum Corporation, ticker QMCO, a $133 million provider of video storage and data management. Nation, the future of the internet is in video, and we're about to see data storage and management needs explode with 5G, autonomous vehicles, and the Internet of Things. All that video and the streamed data needs to be stored somewhere with the capacity to deliver it back from the cloud or hardware instantly. That's where quantum comes in, and I think sales start following this trend higher. Now, the balance sheet isn't as strong here with $8 million in cash against about $150 million in that long-term debt, but operating income turned positive this last year, and the financials should start looking better. This company is plugged into one of the biggest long-term trends that we're going to be seeing over the next decade, and I think it can be a great long-term hold. Click on the video to the right for the 5 dividend stocks I'm buying for the rebound. 5 stocks that pay you to invest and the potential for double-digit returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.